Do I qualify for an offer in compromise? I'm Darren Teamish. They call me the IRS solution attorney. That's kind of a complicated question. It's going to take a few minutes to explain. An offer in compromise is where you make a deal to settle for less with the IRS. A cash offer is what we're going to talk about. A cash offer means you're going to pay the amount of the offer within 5 months upon acceptance. So don't get all tied up and I can't come up with this money in 5 months, because it's 5 months after acceptance. And most offers at this point in time are running somewhere between 6 and 18 months before they're accepted. So you've got a long time before you have to worry about paying the amount that you've offered for a cash offer. Now, the way a cash offer is calculated is by taking this relatively simple equation. It's monthly disposable income times 12 plus your assets, and that equals the amount of your offer. So let me give you an example. If your disposable income was $100, 100 times 12 is $1,200, and let's assume you have no assets. The amount of your offer is pretty simple at that point. It's $1,200. Now, a lot of people say, oh, come on, I owe $250,000, I owe $500,000, I owe $100,000, whatever the amount is. And they say, why in the world would the IRS accept $1,200 in exchange and basically forgive the rest? And the answer is, Congress passed a law. There is an offer and compromise program. It is what it is. So if your math works out to that, like in my example, $100 of monthly disposable income, then the amount of the offer, if you have no assets, is going to be $1,200. So it's very difficult to say if you qualify for an offer in compromise or not. Now, on the IRS's website, there's actually a calculator. There's a tool to help you decide or determine if you qualify for an offer in compromise. It's not really helpful, and I'll tell you why. What does monthly disposable income mean? Well, most people, if they aren't in this industry, think that monthly disposable income means, what do I have left over after all of my expenses at the end of a month? And most people, that's not very much money. Well, monthly disposable income means something a little bit different in this context. It means the difference between your gross income minus your allowable expenses. And the word allowable is really key here. It's allowable under IRS guidelines. I'll give you an example. Every county in this country has a max housing allowance for housing, depending on the size of the family, 1 to 12, whatever the number is. There's a chart that tells you how much your maximum housing and utilities costs can be. And this amount is not really anywhere near what most people in that county spend. It's usually lower. And so then there's other expenses that come into play where what you actually spend, you're actually allowed. I'll give you an example. Health insurance. There is no maximum, and what you actually spend, you're actually allowed. So it's actually a lot of the work that goes into an offer and compromise is twofold: calculating what your monthly disposable income is, and then actually giving you advice about how to spend your money in ways differently than you currently are, so that you can actually minimize your monthly disposable income, therefore reducing the amount of your offer. Now, there is an exception to the rule that I told you about monthly disposable income times 12 plus assets, and here's the exception. It's a little bit challenging to explain, especially briefly. The IRS has a statute of limitations for collection. Generally speaking, that's 10 years from the date the tax is assessed. Tax is assessed when you file a tax return with a balance due, or you go through an audit and they add a balance, they add more to it. Or if you don't file a return, the IRS will prepare a return for you. That's called a substitute for return, and then they assess tax, and then it's assessed. So they have 10 years from the date of the assessment to collect the tax. Now, if your monthly disposable income is sufficient to full pay within the amount of time left on the statute of limitations, you don't get a deal. They just want you to pay. And that kind of makes sense. I'll see if I can give you an example. If you owe $50,000 to the IRS and your monthly disposable income is $1,000 and there's 72 months left on the statute of limitations, then you wouldn't get a deal. And let me tell you why. Because your $1,000 a month of disposable income times 72 months left on the statute of limitations is $72,000. And in my example, I said you only owed $50,000. So you're not going to get a deal in that case because that exception is going to kick in and they're going to bounce your offer out. Now, what does this mean to you? It means that bigger cases are easier to settle than smaller cases. That's sort of the bottom line. So when people call me and they owe $13,000 or they owe $23,000 or something like that and they want an offer in compromise, it's not typically a great solution. There's usually other solutions that are better than an offer in compromise because of that exception. Now, of course, there's exceptions to even what I just said. If the person was really at the poverty line and they owe $13,000, it might be fine to file an offer in compromise. But, generally speaking, if they make $100,000 a year and they owe $23,000, it's not going to be a good offer in compromise for a variety of reasons. So that's the answer to if you qualify for an offer in compromise or not. As you can see, there's a lot of moving parts here. If you have questions about offers in compromise or really anything else that have to do with IRS problem resolution, I invite you to visit our website at getirshelp.com or give us a call at 888-438-6474. That's 888-GET-MESH.